This is a video demonstration on closing entries, and in this video I'm going to work the solution to example number 3, and this example is going to give us some additional practice dealing with the closing journal entries. The company involved is the Carter Company, and they have provided us with a copy of their adjusted trial balance. And if you look at the requirements, the requirement is simply that we prepare the closing journal entries. Now, we already know that there are 4 types of temporary accounts, and of course all 4 of those need to be closed. So ultimately we're going to have 4 closing journal entries. And to do these entries, I'm going to utilize a journal entry page that I have set up in advance in Excel. Now, in terms of the date, this is as of December 31st, 2013. Now, the very first closing entry is always the entry to close revenue. So what I want to do is look at this trial balance and see what type of revenue accounts they have, because some companies have more than one, and then again others just have one. So if we look at this, I see a lot of assets, I see a few liabilities, capital withdrawals. Right here I see repair fees earned, that's a revenue, and then I start seeing expenses. So I only really see one revenue account, and that would be the repair fees earned, and it has a balance of $70,000. And notice that it is a $70,000 credit balance. So remember, for me to close something and take the balance all the way down to 0, I would have to do the exact opposite. So as of the end of the year for 2013, I'm going to have a $70,000 journal entry. I'm closing out the repair fees earned. Now remember, it had a credit balance, so that's why I want to debit it, to remove the balance. And what am I going to close it to? Well, we always close our revenue to income summary. So if I will do that, if I'll debit repair fees earned $70,000 and credit income summary $70,000, then my revenue will be closed out. Now, I'm also going to do a second closing journal entry. This time I'm going to close out the expense accounts. Now, usually most businesses will have several expense accounts, and they do. It looks like they have about 6 of them. And they all have different balances, but notice what they all have in common. They all have debit balances. So in order to close each one of these out, I'm going to have to credit these. So what I'll do is I'll debit income summary, and then I'm going to credit each and every one of those expenses. So first of all, we had depreciation expense on the equipment, and it had a balance of $5,100. So depreciation expense, equipment, and it had a balance of $5,100, but notice I'm putting it over here on the credit side because I'm wanting to close it out. The second expense was wages expense, $37,200. So wages expense, $37,200. And again, credit rather than debit to close it out. Then insurance expense, $550. So insurance expense, $550. Then rent expense, $7,900. The next one, office supplies expense, $2,100. And then finally, utilities expense, $1,000. So that takes care of all the expense accounts. But in order to balance my journal entry, I need to total up all of these so that I have a debit there. So it ends up being a debit of $53,850. So that takes care of the entry to close out all the expenses. So now I've closed out the revenue and the expense. The third closing entry is always the entry to close out income summary. But this journal entry is sometimes a little bit challenging. If I look at the trial balance, notice that I do not see income summary anywhere on the trial balance. And there's a good reason for that. It's not used until the closing process. And then you turn right around and close it. So it's not an account that shows up that often. So I've got a little bit of a problem that I need to overcome. I've got to figure out what kind of a balance this income summary account has. Now, it was used twice. We used it right here for $70,000, but then we used it again over on the other side for $53,850. So what's the difference between $70,000 and $53,850? That's a difference of $16,150. So that's what I'm going to do the journal entry for. Now, where do I want to use income summary? What kind of balance does it have? Well, it has a credit balance, because look at this. The credit side is larger than the debit side. So that means to get rid of it, I'm going to have to do what? I'm going to have to debit income summary. And what does it get closed to? It gets closed to capital. So I'll credit capital, and that will close out the income summary. And then the final closing entry is the entry to close out the withdrawal account. It's got a $10,000 debit balance. So $10,000. It's got a debit balance. So you know what that means. That means to close it out, it has to be credited. And what does it get closed to? It also gets closed out to capital. So that completes the 4 closing journal entries, and that completes this example on the closing process.